Good evening. This is the Elliott Wave Daily Update for the NASDAQ 100 and the S&P 500 for Monday, July the 8th, 2024. Well, the markets kind of gave a mixed picture today. We had a little bit up, we had a little bit of down, with the market pretty much after the close, so in that extra hour that they get at the end of the day, did continue to move higher and again to additional new all-time highs. So nothing really has changed in terms of how the market is trading. We continue to see funds flow into stocks like Apple. Today, it was AMD, which got news that, possibly it's going to pull some business or whatever. I'm not really sure. I didn't read the entire article, but it was making reference that AMD might be the better choice versus AMD or NVIDIA. And now that I find a little bit crazy. But those who may not know, the CEO of AMD and the CEO of NVIDIA are brother and sister. So kind of crazy, but AMD jumped 6 3/4 today. So, if it all works. So we're seeing the continuation of anything AI continues to get a flow of capital into those stocks. Also today, Broadcom up very solidly today, but they're getting ready for their split. And I believe it's I'm not sure if it's a 10-to-1 or even a higher split, but they're doing a split. So things continue to just go along. Plus, I did read a story, it's actually the Wall Street Journal put this one out, talking about that the market, that the S&P and the NASDAQ continue to make new all-time highs because Chairman Powell is going to go and testify before the Senate and the House of Representatives this week. I was like, really? What are they expecting him to say? That give the date that he's going to start cutting rates or whatever. So again, it just appears to me that not only is the media, but also just people are just willing to hang their hat on anything to keep a positive picture in place. Now, for me, that's fine because we're actually still looking for additional highs and we're getting closer to getting to those levels. So I'm going to just jump in to finish up this minor third wave. So within it, we are inside of the minuet fifth wave, which is a part of the minute fifth wave. So you can see, and then within that, and according to how I can best count it right now, let me just say, we're in the sub-minuet fifth wave of the minuet fifth wave of the minute fifth wave. So I think we're cruising, we're going to get there, and then we should start a minor fourth wave correction. And from where we are, it still promises to bring us back down to the fourth wave of one lesser degree, which would be that minute. And all you need to do is just go back to my Saturday podcast, and I went over those levels for both markets. One other thing that I kind of want to talk about today in terms of this options flow. So I know I've spoke about it before, but I just want to reiterate that the moving forward, it all started with the June 21st. So that was just the June 21st, the monthly expiration for June. Then we had the June 28th, which was the quarterly expiration. So if we really look at those quarterly expirations, I think the majority for the month of June was more on the 21st than it was on the 28th. But moving forward, we have a quarterly expiration then in September, and then we have another one in December. So that's the cycle, right? March, June, September, December. So it seems that that's the one that is attracting a lot of option-wise flow of capital into options positions based for September expiration and then again for December expiration, as we saw for June. Now, that in and of itself is what we're just seeing, these momentum flows. So in other words, it's like the market is just really just kind of going on as we continue to move to new all-time highs. The the safety of the market rises with it. So in other words, it's like, how high could they go before they no longer feel that these levels are safe? It's going up, and that it's accumulating a very strong market gamma. So again, I know I'm talking some detail here, but these are important concepts because a lot of people are trying to hang something else bullish. Oh, it's interest rates. Well, it's this. Well, it's that. It's like, maybe. But more, it's the what is trading and how it is trading and where the money is flowing into and what that does then create for the rest of the market. So things have to be hedged. So we get a flow going here. So, and as this all kind of comes together, implied volatility also starts to get crushed here a little bit. And that makes sense when the market is just cruising past major support levels or resistance levels. So we see that it just keeps cruising through them, particularly the resistance levels, right? We're moving up, cruising through these levels. And so there just is this feeling, it's like, well, we're not going to go down. It's just only one direction now. It can only go up. And it's kind of interesting because when you see this happen, as I have in the past, eventually it will stop and eventually it will come down. But what happens is that it structurally just builds more bullish signs than anything else, because technically the market continues to put itself into a strong buy position. Now, what does start to happen? We start to get divergences via RSI. We start to get divergences between the MACD. We start to get divergences on a stochastic basis. Those begin to then overwhelm eventually the whole concept of like, well, we just keep going up and up and up and up. And the market then starts to get some sell signals. Now, what this all does is that when we have the calls and the puts kind of going in the same direction. So in other words, they're buying calls and they're selling the puts, but they're going in the same direction in terms of what that does to the gamma flow. So as a dealer, and you got to sell that, you've got to buy the put and you've got to sell the call, you need to get long because you're picking up a lot of short deltas. So you need to even that out. Now, so the momentum flows really begin, and it kind of, as the puts and the calls are both kind of moving together, the price will continue to grind higher. So what we're seeing is when can and what will finally break this up and make it still, more of a sell than it is a buy. And to be honest with you, I think what we have to see is start to see that flow reverse. We have to stop seeing that they're selling volatility, and now they're going to have to start buying volatility because they do feel that there's some fear that we could just start to tumble. When that's going to occur, I think we're very close. If we continue to get signals like this week and some of the numbers that we're getting, if we continue to get signals that, inflation ain't being put under control, that there's still wage inflation, that there's still energy inflation, right, which gets removed from our PPI and our CPI. It's like, okay, we'll take those out, but we know that they're not coming down. So I think it will eventually go through. All right, so quickly, I just needed to put that in, that the flows, the momentum flows, the option flows are really dominating here, because then it's coming from the other point I want to make is this whole rally in the NASDAQ and the S&P, it's not broad-based. It's very limited to, well, as we call it, the Mag 7, now some additional auxiliary stocks that go along with them. Artificial intelligence continues to dominate. Now, we saw this build again if you were around in the year 2000, I know, 24 years ago. But at that time, that's when the dot-com bust just happened. And what created it? It just happened. And when it did, it got heavy, and then it got heavier, and then it got heavier. And it took a year, I think almost 2 years, to totally unfold. So again, how long this takes before we begin to unfold? And my honest opinion, we still only got a minor 4, and then we got a minor 5, and then an intermediate 4, and then we got an intermediate 5. I think it could be at least the end of the year. But I think we get these corrections in between. But as far as a bigger drop, it's out there. We still got too much upside left to do. All right, inside here, I'm going to start actually. I'll go on this, starting with the NASDAQ. We're going to go out to the hourly chart just so that we can kind of just see the parabolic nature of what the market is doing. All right. So again, here we have that minuet wave 4. So we're in the minuet wave 5. We got waves 1, 2, 3, and 4, I believe now are done. Before I thought this could be 3, and then we were working on the 4. Then they went up to here, and I'll show you an interesting little pattern. Here was the 3, and then we get this, get a 4, and then an ABC. That was ABC. That was 1, 2. So we're inside the 3 of the sub 5. So I think we're getting very close. Doesn't mean we can't just do a little bit of a punch up tomorrow. So now let's take a look at where, and again, if that marker this morning's low, did put in that small wave 4, well, then we connect it via wave 1. We want our fibs for wave 5. Wave 5 is always compared to wave 1 on a fib basis. So the first one out of the gate is that 0.618 is 20,750. Prior to that, though, we do have minuet wave 5 being 1.382, not the most common, but it's out there at 20,698. Well, you know, we got up to 88 today. So we got within 10 points, but I think it may go through it, but it may provide some resistance. Going above that, we have that 750. Above that, here we have the level. Okay. We have 1.618, which is common for a fifth wave when compared to the first wave. 1.618 is there. That's 20,850. Then we have, breaking it down to the sub minuet fifth wave, it'll be 100% of wave 1 at 20,850. 850, 850, 1.618, 100, equality. I like that much better than I like this. So I think that this continues for a while. And from where we are, we've got another 200 points. First up to here, then possibly up to here. And we've got a better match with our resistance levels, with our fib resistance levels. And they agree on what is more common. This is not the most common. This is not the most common. This is the second most common. First being equality, the second being 1.618, the third being 0.618. So all things considered, it is looking pretty good still. Now, moving averages, let's bring it out at least to the hourly, and then we can take a peek. What does it look like? Pretty dang good. But you can see how intraday the market held twice. Held the 20, didn't break it, tried to, but came right back above and then stayed above, tested it again midday, and then stayed above or into the close, but stayed above it. Did not break it. That keeps us in a fairly strong position to continue to move up. The 50, still pretty strong. So what are we going to be looking for once it's all done? We're going to look for a rejection of the level. That would always be good, but a quick down and break on the hourly chart again, that 20. We break the 20, it should accelerate some of that selling. It should start drawing in sell orders. And then if it breaks the 50, we get additional acceleration. So that's all looking at the market on a moving average basis. We'll have other clues inside. Another new all-time high. Wow, check it out. Here it is here, which is this high, right? RSI, weaken. That was a new all-time high that came in here. We go up again here, it comes in at a lower high. We go up again there, granted after market, but still RSI registers. weaker still. Now, I take that as like, it's because it's becoming more concentrated on one or two or three stocks. So it's not broad-based, and we're getting that divergence within the RSI. I think we look at the MACD, we're going to start to see divergence again. This is what we look for as we're getting closer to a top. Okay, over in the S&P, keeping all that what I talked about is from momentum flows and option flows, still very important for the S&P as well, and really showing no difference. It's still the same here as well. Now, I'm going to start here on the hourly chart. So again, just quick, what we're looking at, we're in that minuet wave 5, which is also a part of the minute wave 5. And so those are still in action. And within this minuet wave 5, we've done 1, 2, 3, and 4. So just like in the NASDAQ, I believe we're in that little bit of a final push. And how high can it get? Well, we're going to take a look. So inside of all of this, this was actually Friday. This was today. And it really was just the opening. So we kind of zipped up there, put in that high, came down in 3. And this is what I'm going to put out. So if I mark that as the high, and then I ran my fibs between 2 and the top of 3, 0.236, it kind of came down. So it got halfway between 236 and 382. And for such a high level with a lot of support to buy, well, didn't reach the 382 most common, but it did come down, which is why I'm much more comfortable saying that the 3 was here. Put in a quick 4, fits on the fib level, and then we started up again. Okay, so what I am going to do is I'm going to take those off so that they're no longer, well, actually, I'll leave them on just in case this was A, B, and we come down again. If we come down again, then of course this fib will be adjusted. So we'll leave open the potential that we might just turn one more time and come down before this small 4 is complete. Taking that it is, where can we go? I'm going to come down to the 15-minute chart, and we're going to start to open it up, and we'll take a look. So, minuet wave 5 equal to minuet wave 1 at 56.64. Well, if this did put our marker in for the subminuet 4th wave, then subminuet wave 5 would be 0.618 of subminuet wave 1 at 56.56. Okay. 56.56 to 56.64. If we get the pattern, if we get 5 up into here, then it could work. Outside of that, we start to get a little disjointed here with our fibs because we have that, and then we don't have that strength anymore until we're above 5,700, where we get the minute 5th wave, and we also get the minuet 5th wave coming in a little small little tight package between 57.59 and 57.63. But here, little disjointed. But what we do have is that 100% there, and then at 56.82 we have the 100% here. That makes more sense. So this zone could complete it. It could complete it. And what becomes more important is not necessarily that 100% for minute wave 5, because minute wave 5 will have finished its 5th wave because we're getting everything underneath it completing 5s. So then this becomes number 1 zone, and this becomes number 2 zone. And we'll see what happens. Now, again, you know, the NASDAQ moves in much larger ranges because, and the S&P tends to be a little bit tighter. So it's instead of looking for a $200 or $300 or $400 or 400-point move, we're looking for 50 to 100 points here in the S&P. And at these levels, we're not even looking for all that much. If we're close to 56.28, and we're looking for 56.64, well, it's about a $35, $37 move. So, okay, so not that bad. So, I mean, I'm still looking for upside. And if we just open this back up, we can see, yes, it seems to be forming, but we're going to leave open the possibility that there's ABC, A, B, C, B. We come back down in the C wave, we get down to this level, and then we roar again. Just leaving that out there. If not, then we start to break above this high, which is 56.37-ish, 38, and we start heading up towards these zones. All right, moving averages. Well, I'm going to bring it out to the hourly because those are the ones that kind of matter. Open it up, we'll take a look. There goes that 20, same deal. Broke it, accelerated a little bit, but got right back above it and decided to test it, but then move above it. So the close is above that 20. No harm, no foul, as they say. So here's the 13. Yeah, just chugging along, but that 20 still got a good angle to it, which does suggest we still have more upside to do. The 50 still the same, chugging along with the 200, all angling pretty strong. So this whole move is very strong, undoubtedly. The strength of the market remains. The buyers are still in there. They're not giving up just yet. And they're going to be looking for additional evidence not to. Okay, this we're going to wrap it up for today. And the next update will be on Tuesday, July the 8th. Before I just walk out the door on that one, let me just tell you what's coming out tomorrow. Nothing big. We have the NFIB Optimism Index. And then we have, well, we do have, let me just say, we have the Fed Vice Chair, Michael Barr, he's out there. He'll be talking about 9:15. And then Chairman Powell will give his testimony to the Senate or before the Senate at 10 a.m. And at 1:30, Fed Governor Michelle Bowman will also doing some introductory remarks somewhere. So a couple of things. Wednesday, wholesale inventories, and then another slew. We have Chairman Powell testifying over in the House. And then we have Chicago Fed President Austin Goolsbee and Michelle Bowman at a Fed event. Oh boy, they're putting them everywhere. And then we have Fed Governor Lisa Cook. That's Wednesday. So the bigger things don't come out until Thursday and Friday. And again, that's CPI and PPI. All right. So next update, Tuesday, July the 9th.